In the first video of this series of the Step 4 Expand on Savings and Emergency Fund, I went over different steps of how to purpose or place a purpose and objective on our different accounts. So I talked about savings accounts, checking accounts, money market accounts. Now I'm going over some tips on choosing a bank or multiple banks. So a lot of us kind of choose a bank based on where our parents banked. That's pretty common in the United States where our parents banked for so long, and then at 15 or 16 or even younger, our parents open up a custodial account for us, and we kind of just choose that bank and we stick with it. But if you are moving or want to change banks and you have a bank that's a little bit better for you, then here are some tips that you should know when choosing a bank. So before opening an account, you need to make sure you go over all account features. So make sure the account features are what's right for your life or for your family's financial life. So easy access, maybe you want online because you travel so much, or there's not a physical location, it's just too far away, or maybe you like a physical location and you don't really like the online feature, so you want a brick and mortar bank that you can talk to somebody or that you have a relationship with, and you want to use that bank instead. Maybe there's cool app features. The app looks nice, it's clean. The online part is really feasible and very user friendly for you. Customer service is great. So all that are important account features when deciding to open up a bank. And this is the second point here is probably the biggest point that a lot of people miss out on: reading the fine print for fees or other unsavory terms. So make sure you scan the fine print, maybe ask somebody to look over it with you to ensure there are no hidden fees or any other kind of terms that might not be good for you. Ask questions about everything. A good tip for this is when you are going through the fine print, Control F on your computer. Control F so I would just get a PDF of their terms whenever they'll send you a bunch of paperwork whenever you start an account, or before you even start the account. Make sure you do this. Control F and then type in fees, and it'll show all the different areas where fees will be added to your account, or penalty fees and all that. You can read through those fees and see what you're being charged, or different situations to look out for. Make sure the financial institution is FDIC insured. So what that means is the Federal Deposit Insurance Corporation is a government agency. They make sure that if the bank is FDIC insured, that if you have less than $250,000 deposited in that bank, then it's going to be insured, just in case that, in the very unlikely event that that bank just closes down and shuts its doors, you'll at least have your deposit insured. Most banks are, most financial institutions are somewhat government insured, so you just need to just double check to make sure that they are. You compare the benefits, analyze interest rates and any other benefits. Compare the benefits with 2 or 3 other banks you plan on opening up an account with. So hint, good tip here, usually much easier to put all your accounts into one bank. Much easier just to compare. If you really like a bank, put all your different accounts, your investment accounts, savings accounts, checking accounts, emergency fund accounts, whatever, put it all in one bank. But there is so much software out there and so much technology out there that it's so easy to merge your accounts. So say you have 3 different banks opened up and you have a different account in each one of those banks. There's tools and apps and Excel sheets. There's all types of things out there that you can just kind of put it all into one program. And that way you can monitor and access it. So online banking versus mobile banking, or online banking and mobile banking versus brick and mortar. So online and mobile banking, it's easily accessible, convenience, often cheaper rates, better features. This means that I can bank anywhere in the world. I can travel to Mexico, I can travel to Vietnam, and I can still have access to my bank features. Online and mobile banking, they do offer more of the ease of life features, where physical banks can offer more opportunities, especially if you have a good relationship with them. So physical bank customer service can be more efficient. If you have a great relationship with that bank, then you can work with them on different loan terms. You can work with them on different contacts and preferences. So if you're working with a physical bank, my experience with a home loan, very good family friends with the branch manager. She was able to work with me and my wife when we were getting a loan for our first house, for our first home that we've ever bought, and also had excellent contacts throughout our town. So it was a great time to use a physical bank, but we still use online banking for some other things. In modern times and modern technology, usually you can get the best of both worlds. You can get the best of online and physical banks because banking technology has improved tremendously in the past couple of years. So I'll have people ask me this question: credit union or commercial bank? Should I use a small town bank? Should I use a credit union or a national chain commercial bank? And they all have their pros and cons. So commercial banks, they have been around longer. Most of them have been heavily regulated by the Federal Reserve and by the U.S. government. So commercial banks that have been around longer, they are well established in the professional world. So they have contacts outside of the banking system. Banks are also businesses though. So where they're more well known and trusted, banks often have more features and better connections, but they also are for profit. So they make for profit decisions. Whereas credit unions are becoming more popular because they aren't as for profit. Credit unions are not for profit institutions. And when people make deposits, they become part owners. So they become part of the system, almost like an employee-owned business, employer-owned business. So credit unions historically offer better interest rates because of this system that they set up. The only thing bad about credit unions is many credit unions have membership requirements, and some of the perks, they can be beat already by discount online banks only. So I would definitely shop around for the best financial institution when you're deciding between credit union or commercial bank or maybe both. Just shop around, take your